Hello friends, this will be a quick, get started guide about trading crude oil, anything and everything about knowing the fundamentals and other things around crude oil, the contracts and things like that. So if you're trading crude oil or about to get started on trading crude oil, I think this will be a very quick session which will help you understand, the markets and the variations and other things. Okay, I'll try to cover it in a summary and hopefully this will prepare you to understand the different types of markets and other things around crude oil. Okay, so trading oil is essentially, you take oil is a commodity which is a globally traded commodity. So it works by enabling you to take a position on the futures contract will rise or fall basis that you take a decision and take a bet like any other stocks or anything that you do or futures or index or anything. You are essentially betting on direction of the crude oil and looking to profit from it typically. Okay, so that's what we do. Either you took a long or a short bet on the crude oil and we look to profit from it. Okay, but unlike index, there are certain variations which you want to be covering about. One is what are the ways to trade crude oil? Okay, you can trade crude oil in a futures contract. Futures contract are traded in different exchanges. The most prominent exchange where it's traded is the NYMEX crude, which is WTI crude. Okay, and then you can also do options contract, which is again, options are traded in different exchanges again, which is wherever there are futures contracts, generally options contract in NYMEX, MCX, and other places we have these contracts. Okay, and then there's a lot of CFD contracts which are offered by FX brokers, which is basically they try to mimic the prices of the futures and spots around for WTI, and you are still be able to trade a bet. So if generally a future moves by 1% or the spot moves by 1%, the CFD will also tend to move by 1%. Okay. The subtle variation in crude is, there are different types of crudes that are traded and priced globally. So you have the Brent crude, which is the UK oil and Brent crude, which is the largest traded crude. Okay, and then you have your WTI crude. So these different types of crude oil, as I said, they are basically mined at basically different places, and basis that their pricing and the components and the constituents of these are different, which is very similar to all lot of other commodities where different commodities that you trade have variations based on the geography, based on the quality of different grades of commodity and things like that. Those variations happen. Okay, it's a common trade in the commodity market. Okay, this is a quick graph which says, where different crude oil is very common. So WTI crude is benchmark in US and also a lot of global futures benchmark. Okay, Brent is the most physically traded crude, which is almost now 80% plus, I think, of the market traded in terms of. So Brent is basically benchmark in all the, Africa and large parts of, Asia and Europe and everything. Okay, and then also Dubai crude, which is there, which is benchmarked for these countries basically. Okay, so Australia and some parts of Africa and other Middle East, they price it on based on this. Just to understand, to keep it short and sweet, different types of crude that are there that are traded. The most common type generally, which is Brent and WTI. A lot of futures are benchmark on the WTI. Okay, so what you see on MCX is basically benchmark on the WTI. Okay, and then Brent is a traded one as well. So I'll just quickly cover the different types, for our understanding so that you know and fundamentally how these markets are. Okay, Brent crude is the most traded oil of all the benchmark and is defined as crude mostly drilled from the Northern Sea. Northern Sea is basically the northern part of Europe. Okay, so these are the regions where it's mined. Basically, the oil fields Brent, Forties, Osberg, and Ekofisk. Okay, so BFOE, and in fact, Brent is an acronym for the areas which is Broome, Rannoch, Etiveness, and Tabet. These are the areas where it is mined, and based on that, the acronym is decided. Okay, and this oil is widely used for both its sweet and light nature. Okay, making it easy to refine into diesel fuel and other things. So it's the most common oil. What makes it very common in terms of usage is because this is mined in the oil fields and they are stored in offshore oil, essentially oil locations. So it's very easy to port it into oil tankers and oil those ships basically. Okay, so essentially transportation and other things are a lot easier. This is traded in the ICE. Okay, the contracts for this is traded in ICE, which is an exchange, and UK oil is benchmark on this crude itself. Okay, so similarly, the WTI is America's equivalent of oil, which is West Texas Intermediary. It's a slightly sweeter and lighter when compared to Brent. So the quality of Brent is a little different than this one. Okay, and WTI is a considered a higher quality crude, but in terms of the quality of the constituents, etc. Okay, and this is traded in NYMEX as CL futures. So CL is one of the most traded, most common traded contracts, which is crude oil light. Okay, and in a lot of US oil FX charts, if you're following forex brokers and other things, they are benchmark on the US oil spot, okay, which is the WTI spot basically. Okay, just another trivia when I use the word sweet and sour and other things, it basically lies in the difference in the sulfur content of the oil, which is measured against a benchmark of 0.5%, with anything higher than the half percent considered as a sour oil, and anything lower than that is considered as a sweet oil. Okay, both has its own supply and demand. So when you consider WTI and you consider Brent, okay, both has its own supply and demand cycles. So prices of both tend to vary based on their own individual supply and demand cycles. And at the same time, also there's a correlation between different types of crude eventually traded, right? Okay, so due to high supply generally, okay, due to a little higher supply of the WTI, it is considered, if you see the prices in trend wise, most of the time WTI prices will be a few dollars lower than the Brent crude prices. Okay. Further, each CFD platform will have its own price variation. There will be certain price variations because all of these forex brokers try to mimic the prices and but of your forex, crude contracts in CL, but they are traded under the forex brokers. Their the positions are squared off internally or maybe in ECN. Okay, so there will be price variations of a few cents here and there, sometimes on the high low, which is a bit tricky sometimes handling the stop losses and other things, but you have to be a little mindful of that basically. Okay, and for MCX, okay, the crude price, that MCX that you see is the WTI crude price into the INR price, which whatever is the USD INR price. So MCX prices varies because of these two factors. If maybe the WTI price is same, but the INR price, USD INR has increased, so MCX price will show a higher value, okay, compared to this crude. Okay, similarly, these two, so USD INR and other things do have an impact on the pricing of the crude. Okay, in MCX. So remember this thing, but in most cases it is just the charts will be very similar, absolutely similar to each other. Okay, so the trend of the chart, basically the higher low, that whatever you see in the chart will be very similar to each other. But so you can follow WTI chart analysis and keep on assuming that the variation in USD INR is low compared to this. So you can keep on analyzing basis the WTI price and take a decision as well if you want to. Okay. So just a quick on the contract specifications. Price quoted is a one barrel basically. So when you say $70 crude or 7,000 or crude in INR terms, it's basically the contract of one barrel. Uh, you know, and but price of one barrel. The contract is in 1,000 barrel contracts. Like a contract basically is the lot size. For example, Nifty is a 50 lot size, right? 50 quantity and Bank Nifty 20. Similarly, in crude, it is considered 1,000 barrels. So $1 movement in will impact have $1,000 USD impact on your lot on the PNL basically. Okay. Similarly for MCX, every 1 point impacts 100 INR per lot. So if a crude moves by 1 point, it is 100. If it moves by 10 point, you have a plus minus 1,000. If it moves by 100 points, you have a plus minus 10,000 impact. Okay. The commodity is traded at 24 hours a day for 5 days. Okay, so Saturday, Sundays, other than that, it's traded 24 hours a day. MCX timings are between 9 a.m. and 11:30 p.m. usually, but it's adjusted because of daylight savings and other things once or twice a year. Okay, what is a good time to trade crude? The good time that I figured out to trade crude is okay. Um, is around when the NIMEX opens, which is about 8 a.m. Central, roughly about 7:30, 8 p.m. in IST times. Okay, you see a lot of fluctuations and movements in the liquidity increases, the ranges increases. So I tend to adjust my order flow charts and other charts at that point of time. Okay, so generally in the first half, I'll keep a, lower, so I'll lower range for order flow block, maybe one or two for MCX crude, and in the second half, I'll may move it to two or three depending on the volatility. So mostly the first half is quiet, the up to 4 o'clock, 5 o'clock mostly. Mostly these are the times you want to trade rotationals. After 5 o'clock, 6 o'clock, you want to or 7:30 specifically, you want to trade trend plays if at all in crude. Okay. CFD is a good proxy. Okay. So FX CFD contracts mimic US oil. Most are reasonably liquid but have certain variations, spikes, which can be tricky, as I said. It's a good proxy and a way to access US oil charts. So sometimes, we want to actually, when the access to a CL crude oil light chart is expensive, if you are not an US, you do not have a US trading account. So the proxies, is basically using a CFD chart for crude oil, US oil. And that works reasonably well, very well in terms of analysis, knowing highs, lows, etc. Okay. Go charting has a US oil CFD feed, so Go charting helps you provide, both the US oil and the MCX feed. You can put it side by side and do a side by side analysis and trade as well. Okay, I have shared the templates in our trading group. If you need, just feel free to bring it in our trading group as well. MCX crude charts are identical to US oil or any CFD proxy of US oil. As I said, the chart patterns and high lows are mostly identical. MCX futures are also fairly liquid, so there is no problem in terms of liquidity. You can trade pretty decent size. Okay, but what I do is sometimes MCX closes at 11:30, but the crude oil markets continue to trade after that. So it is very essential you reconcile your chart sometimes after before open to US markets, US oil charts, because sometimes if you should have gone to a target range or a support range and bounced back off that, but M6 by the time it opens next day, the bounce is, you only see the bounce back price, so you do not know, you are not aware of the rotation from a support or a resistance, also those levels. So it's very important to come back and just have a quick check on the US oil charts so that you know if a level has been breached or tested or something like that. Okay. Okay. All contracts have their own expiry. So M6 contract has different expiries. CL has a different expiry. So they have their expiries. CFD contracts, which are from forex brokers, they do not have expiries generally. Okay. So also another thing I noticed is near the end of the month, the margins increase for the near month contract. So if it's current month contract, margin will increase. So maybe it is good to try to shift, around 2 to 3 days for when the expiry is coming. So maybe it is good to try and shift to next month contracts, which becomes liquid by that time, and you can save on margin benefits, etc. Okay. Option liquidity is reasonable, not great in MCX yet. Okay, so if you're trading options, buying and selling, it is reasonable, I would say, but it is not a very great liquidity like an Nifty or a Bank Nifty, but better than certain stock options, so somewhere in between. And those brokers are still allowing limit prices, so market execution might be a challenge. So you have to put a limit price. And the only thing to avoid is, now as M6 has also launched mid-range contracts. So previously the contracts would be at 7,000, 7,100, 7,200, at 100-point differences. Now M6 has launched contracts at 50-point differences also, which are not very liquid. Okay, so avoid trading them at this point. Okay, things may change over a period of time, but avoid trading them at this point. Okay. Uh, Then, what are the different types of trades you can take? The most common trade, the trade that I generally take, and the trade that most retail would take is buy or sell futures or option contract and take directional bets basically. So you can do scalping, you can do swing trading on the directional bets, and also intraday swings. The good part about trading crude and any commodities, intraday swings are as much as a positional swing in other markets because it's really open for a very long time, so you can have a position on for a fairly reasonable long time, and at the same time keep that intraday position, play it like a swing position basically. Okay, the gaps between the markets is less, so the risk of overnight events and other things are less, so you can really play it like a your intraday swings can be played where you still are able to capture a larger move, but have control over overnight risk and other things because you don't you're trading for a longer period of time. Okay. Average margin at this point for MCX is about 250K, which is 2 lakh 50 plus minus here and there per lot. Okay. The other way of doing it is doing calendar spreads, and which is basically doing a spread between current month and next month. These spreads vary, these spreads change over time, so that is a very low risk trade to take sometimes, and have a higher probability of returns, but of course the return percentage reduces. Then there's a very common global trade, which is trading different spreads between oil contracts. So you will do a spread between UK oil and US oil, but these things can be done. But for Indian traders, this is not accessible at this point. So you only be able to trade. You will not be able to trade this. Okay. Okay. Then multi-leg structured options bets can be taken both in anywhere when options are offered, which is both NYMEX, MCX, anywhere. You can take multi-leg options bet. They are only monthly contracts right now. So the theta decay aspect and all those aspects are very low. It accelerates around the end of the month, but otherwise you can take those trades if you want to trade. Okay. What is the problem is there are no margin benefits for hedged positions yet. So the margins are close to the futures margins anywhere around 2 lakh. Okay, so the margin benefits are not there. Okay. The last thing, what are the factors that affect crude prices, which is the most important thing we would want to know. What are the things that really affect the crude prices? Okay, the primary effect or the most common effect that we see is the OPEC decision. OPEC is a countries which regulate a lot of crude oil supplies, which basically Organization of Petroleum Exporting Countries. They regulate majority of the crude oil supplies. So they take periodic policy decisions to regulate the supply and production, which impact both short-term and mid-term prices. Okay, so essentially decreasing or increasing their output can impact both the prices basically. So OPEC keeps on taking these decisions, policy decisions of whether to cut production, increase production, and things like that. Okay, whenever such news flows come in, there are scheduled and unscheduled meetings. You have to be mindful, and prices do react sharply to that, both intraday, of course, and eventually, if they decide that okay, I'm having lesser production for the next 3 months, then prices you will expect to be on the higher ranges. Okay. Then the other common is the inventory report. It's for the US IE inventory, which is a weekly report. It comes in on Wednesday. Okay. So market tend to react to short term, and this comes around the evening time, 8 or 9 o'clock. So market do tend to react very sharply to that. Okay. So you have to be mindful of when this report comes in and what is your position before or after that. So be very be able to monitor that position if you want avoid that inventory report data point, and something like that, or wait for that report to come through, or if you're trading in that direction, it might give you a very quick good move as well. So it depends on how you're positioning yourself, what is the expectations. Okay, so generally for that, what happens is if the inventory is higher than expected, that means more supply of crude is there, that means prices will tend to go lower. So what traders trying to see is whether the inventory trend is increasing or decreasing. If it's increasing, then they will look to short the market basically. Okay. Then there are global market and other economic conditions and other things. So, for example, oil demand is based on how global economies and growth forecast are. Basically, if the economies are growing well, economies are doing well, that means more manufacturing, more demand. That means more need for crude oil for factories and other things. So that way, crude oil prices will be on the uptrend basically. Okay, if go so on the other side, if global economy so that way, general correlation is if stock economies are doing well, then stock markets are doing well, and if stock markets are doing well, then you tend to see crude oil also doing well. But there are enough instances where these divergences do happen because of the other factor like OPEC and pipeline and other things. So it's a bit tricky to play that on the short term, but it's more of an fundamental theme that you might keep in mind generally, if especially around the US market. So you track the US markets and try to do correlations with that. Okay. The the last impact that we have seen that happens is the pipeline outages and disruptions. So there are certain times news flow because of certain pipeline being burst or blocked or other things, which cause short-term supply outages or supply disruptions. This can lead to, short-term spikes in price, basically on the higher side in most cases. Okay. Also, any war-like situations or attack like refineries have happened in the past where, especially around Middle East and other things, where refineries have been attacked, which essentially meant that supply will be affected for in a few weeks or months, and then prices will tend to increase and jump because of reacting to this news flow. Okay, I think these are the other things. What is good is there very less impact on domestic factors, especially from an India context. Okay, so India domestic factors will have not much impact on crude oil prices, like our any news flow, our price decisions, our inflation and other data. So as a trader, it provides you a certain degree of divergence of trading Indian domestic, in news impact and other things like RBI, and we have which affects our normal markets, right? Basically, the equity markets. In this case, it will not really affect. Okay, so that's all for now. Any questions, please, come and do share in our Telegram group or on Twitter or YouTube, wherever you want. And keep trading well, and keep your risk managed. Okay. Of late, crude markets has been very tricky in terms of the market rotations and other things. Open interest have been on the lower side. So try to maybe next few days, probably till the year end, maybe it's not a great idea to trade crude, but overall, it's a great market to trade, large ranges, large liquidity. So it's like one of those very few markets where you have good liquidity and also have good movements. Okay, so if you are looking to play trends and other things, both intraday and swing, crude is a wonderful market to do that. Okay, guys, thank you for listening to this, and hope it was useful, and hope to see you soon again.